Thank you guys for clicking on this week's video. Today we're going to go over risk management. Now basically risk management is a fancy way of saying that you would want to manage your stocks in a way that you have the most profit with the least amount of loss. So for example, if let's say in one scenario you have a stock that's trading at $10 a share and you think it can go to 100 and the downside is you think it can go down to $1, you're risking 90% of your stock, but you think the upside potential is over 10 times what it's currently trading at, versus another stock that's trading at $10 a share and you think it can go down to $8 a share, but you think it can really go up to $12 a share, both being a 20% gain and or loss. Now that's where you as an investor decide whether or not you want to take the opportunity and go in on that stock with one being more risky than the other. Now personally, I always assume a stock can go to zero, so I always assume that's the most risk I can get, and I'll show you guys my process. So basically what I like to do when I'm trying to manage my risk, I like to go look at the analyst price targets. So in this example, we're going to go over American Airlines. And as you can see, the upside is that the stock can go to $27 a share, and the downside is that the stock can go as low as $7 a share, with the average being $12.88. And I know the screenshot doesn't show it, but it is currently trading at $11.91. There's about an 8% upside on average, with the highest upside being about 127% and the low side being about 42%. Obviously, I like to choose stocks with a lot greater high side potential forecast versus a low side potential forecast. So for me personally, I'd rather get into a stock that, in the previous example, where it can go to $100 but it could also go down to $1, versus a stock that could go only up to $12 but it would only really go down to $8, because I'm generally always assuming that a stock will go down to zero. Hence why also in investing, you should only invest what you're willing to lose. The next thing I'll look at is I'll look at the sector as a whole and I'll check to see if it's bullish or bearish. I really only want to invest into bearish markets because if it's a bullish market, obviously it's dying, so that's too much risk for me. And you can see as for American Airlines, they're actually very bearish in their sector, and that's obviously because of the whole pandemic that's going on. It's really hard to travel. But again, in this case, I actually would still keep looking at it just because for this stock, I'd be investing for the future, not for the short-term gains. So I'm not too worried about the fact that they're very bearish. And the last thing I like to check is their charts, mostly because I like to see where the stock used to be and where it's been heading and where it's currently at. So if you check right now, it's at its all-time low that it's ever been, with the highest it's ever been at around $58 per share, making it seem like $11 a share is a very big steal. And in fact, I'm not too worried at them going out of business since the airline industry did get a huge bailout. And there's talk that actually that the Carnival cruises might get a bailout too, so I might want to keep those stocks on my radar as well. But with keeping that in mind, I just want to see the volatility of this stock. And since we're in an extreme situation where stocks had a huge drastic drop off because of this whole pandemic, it does change the analysis a little bit, but I can see that over the last year or so, that besides its huge sell-off, it really hasn't been that volatile of a stock, with its day range being not too far off from each other. So for this example, this would most definitely be a stock I'd be willing to look at. And this type of risk management strategy most directly applies to buying stocks, not necessarily short selling, swing trades, or options, just because you'd have to invest a different way. With swing trading, obviously you want the stock to be way more volatile. Same thing with options, unless you're doing covered calls. That's a whole different scenario. So again, I hope you guys liked the video. Maybe it gave you some new insight on how you want to start investing. Let me know in the comments below your little process you go through for risk management. As always, I hope you guys enjoyed the video. Remember to like, comment, and subscribe for more future content.